Imagine a world where Apple's stock didn't exist. Would the stock market be as exciting? Today, we dive into the thrilling world of Apple's stock. This tech giant is no stranger to the limelight. Its stock has been a roller coaster ride that has captivated the attention of investors worldwide, and just recently, the curtains were raised on the much-anticipated iPhone 15 event. The stakes were high, the expectations skyrocketing. Did it manage to dazzle the world, or was it a damp squib? Well, shares of Apple declined by 1.7% on the day of the event. Quite a paradox, isn't it? A hot new product launch, yet the stock takes a dip. But then again, the stock market is as unpredictable as a game of roulette, isn't it? So, has the iPhone 15 event caused an Apple stock boom or bust? Stick around to find out. 2023 has been quite the ride for Apple stock. Buckle up as we take you through the highs and lows. If you've been following the stock market, you'll know that Apple has had its fair share of dips and peaks this year. It's been more thrilling than the fastest roller coaster at your favorite amusement park. The iPhone 15 launch was highly anticipated, but the days leading up to it saw a drop of 6% in Apple's shares. This might have been due to pre-launch jitters, or perhaps investors were playing a bit of a waiting game to see if the new launch would live up to the hype. But don't let that 6% dip mislead you. The stock has been on a steady upward trajectory for the most part of the year. In fact, despite the recent tumble, Apple's stock has seen an impressive increase of 41% year to date. That's quite a leap, right? It's like the stock took a ride on one of those space shuttles and forgot to come back down. But not all has been rosy for Apple. The company has faced a few speed bumps along the way, including slumping smartphone sales in the US, being dubbed a gatekeeper by the European Commission, and a ban on iPhones for government employees in Beijing. Yet, in the face of these challenges, the stock has managed to hold its ground. It's like that sturdy old tree in your backyard that refuses to bow down to the wind. Resilience seems to be Apple's middle name. Despite the recent drop, the stock has shown resilience. But what do the experts say? Stay tuned as we delve into the predictions and analyses from the top minds in the business. Because, at the end of the day, investing is a bit like playing chess. It's all about strategy, patience, and sometimes taking a bit of a gamble. Top analysts and brokerage houses have their say. Do they see a bull or a bear in Apple's future? Let's turn our attention to the opinion of the big guns, the analysts and brokerage houses. Despite a recent dip in Apple's stock following the unveiling of the iPhone 15, Wall Street remains largely bullish, particularly on the technology sector. The strategists over at Goldman Sachs note that tech companies like Apple are more likely to face regulation related to privacy, data use, and mental health rather than pricing, providing a somewhat stable environment for growth. On the other hand, Goldman Sachs has also identified 5 key risks for Apple and its investors, which include a weakness in the macroeconomic environment, disruptions to global trade, competition in various business lines, regulatory scrutiny, and the uncertainty of mergers and acquisitions. However, they also believe that Apple's strong brand loyalty and massive installed base of iPhone users should support continued revenue growth. It's a bit of a mixed bag, isn't it? Now, let's talk about the elephant in the room, the recent iPhone 15 event. The stock fell over 2.3% on the day of the event. It seems the market was not as thrilled about the new iPhone as Apple enthusiasts were. But remember, the stock market is a fickle creature, often swayed by sentiment and speculation. It's like that friend who changes their favorite color every week. Despite these short-term fluctuations, analysts are keeping their eyes on the long game. They're watching for the August Consumer Price Index report, which could impact the Federal Reserve's next policy move. Goldman Sachs strategists expect the headline CPI to rise 3.58% annually, up from July's 3.2% gain. So the experts have weighed in. But what about the biggest investors? Warren Buffett and Apple stock have a long history, but will it be a tale of continued investment or a breakup story? Let's delve into this intriguing plotline. Warren Buffett, the Oracle of Omaha, is no stranger to Apple's allure. His investment firm Berkshire Hathaway has been a significant stakeholder in Apple for quite some time. Buffett, known for his value investing strategy, has always admired Apple's robust brand loyalty and tremendous user base. However, the recent unveiling of the iPhone 15 and the subsequent dip in Apple's stock has left the market buzzing with speculation. Is this a mere hiccup or a sign of challenging times ahead? And more importantly, where does Warren Buffett stand amidst this? Despite the short-term jitters, Buffett's history suggests his investments are rarely swayed by momentary market fluctuations. He's always been more about the long game. But with Apple facing challenges such as regulatory scrutiny and fierce competition, it's worth pondering if the sage of Omaha might rethink his strategy. Remember, Buffett is not one to shy away from making bold moves. He did, after all, famously sell a chunk of his Apple shares back in 2020, a move that many thought unthinkable at the time. So, the question remains, will Buffett continue to bet big on Apple, or might we see another surprising play? It's clear that the big players are playing their cards close to their chest, but what's in store for the average investor? Well, we'll explore that in the next scene. Stay tuned for some more juicy Apple tales. With all this information, the question remains, should you bite into the Apple stock? Let's delve into that. In the grand scheme of things, Apple has consistently proven to be a strong player in the technology sector. Despite the recent dip following the iPhone 15 event, the stock has seen a steady rise of 41% year-to-date. That's not just a small apple seed of growth, it's a full-blown apple tree. Now, investing is often about timing. The question is, do you jump in now or wait for a dip? To answer that, we need to consider the risks and rewards. On one hand, Goldman Sachs has identified potential risks such as disruptions to global trade, regulatory scrutiny, and the uncertainty of mergers and acquisitions. On the other hand, Apple's strong brand loyalty and massive installed base of iPhone users should support continued revenue growth. So, should you wait for a dip? Well, that's like waiting for an apple to fall from the tree. It might happen or it might not, but remember, even if it does, the apple doesn't fall far from the tree. Apple's history of resilience and growth suggests that any dip could be a temporary blip on an otherwise upward trajectory. The Apple stock is indeed a tempting investment, but remember, the stock market is no apple pie. It requires careful thought and consideration. As we wind down, it's clear that the future of Apple's stock is anything but predictable. We've journeyed together through the ups and downs of this tech giant stock, heard from the analysts and the bigwigs of brokerage houses, and even peeked into Warren Buffett's portfolio. Yet the question remains, is Apple the golden ticket to your investment dreams or just another fruit in the market's orchard? Remember, in the stock market, it's not always about the apples and oranges. Sometimes it's about the pies. Keep an eye on Apple's stock and who knows, you might just find your perfect investment pie.